China, not exclusively, but I mean, there has been numerous central banks all over the world buying gold. We've even, of course, seen Poland doing it, Hungary doing it, the Czech Republic did it to some extent. So countries all over the world understand that the writing's on the wall for fiat-based currencies. The what I would call US hegemony, the US empire or the Western empire, the dollar-based empire is rapidly coming to an end. We spoke about that previously, and it's interesting, when I first talked about this happening a decade ago, I had people genuinely asking, had I lost my mind? And I said, no, watch what happens. And the same people actually have come back a decade later and going, you're right. I don't know how you knew it, but you were right in it. And they admitted even a few years ago they'd seen these changes. But I think for a lot of people in the West, they're very frightened what this means, because they think China wants to be an hegemonic power, which it doesn't. It has no desire to have a world reserve currency. There won't be one in the future because it's pointless having one. You don't need them. You might want to internationalize your currency, fair enough, but the same could be said in the future for other countries, and maybe one day the ruble will be internationalized because China has an enormous commodity base, not just in terms of energy, but also in food commodities and other, rare earths, etc., and other things like copper, whatever, right across the board. They've hardly exploited any of those resources. So why not? Why is that not feasible to happen in the future? I think it probably will be. I can't see the West ever utilizing that on that basis, but not for the foreseeable future, but the global South will gladly do so, and it gives confidence in a currency. And this is why, if you trade internationally with the Chinese and the Chinese said, look, this yuan's fully convertible into gold, that is going to be a huge incentive for countries all around the world to go, well, I'm happy to trade in the yuan, because, if I'm not happy holding the yuan, I can, and also that's the other thing, it's to sell it at market price. It's not a fixed price. That's a huge incentive, because then that will even out forex fluctuations. So everybody's very happy on that basis, and China's quite happy to do it. Well, if China does it, Russia could do it. Who knows in the end? Maybe the Saudis will do it. I'm not saying that's the case, but Saudis got very interested in having gold exchanges also. So you can see this pattern developing all over the world. It just largely isn't happening in the West because, like everything, the West rests on its laurels and wants to believe that, US hegemony is here to stay. And it's almost like now with the US thinking, well, we know the dollar's in trouble. We can't admit it. We're going to pretend the dollar's really strong. But I know, let's launch a stable coin. The reason for doing that is precisely because they know that in the traditional sense of the word, the dollar is no longer perceived to be, or the dollar US Treasury complex perceived to be a safe haven. The world is gradually de-dollarizing, and in some cases rapidly so. So they're going, we're in serious trouble.
Let's talk about what's really going on, because the mainstream financial media won't touch this. They'll give you daily updates on the S&P, on the NASDAQ, on some tech stock earnings, and they'll throw in a quick mention of the dollar index if you're lucky. But when was the last time you saw Bloomberg or CNBC spend more than 30 seconds discussing central bank gold purchases? When did the BBC last run a headline about the Shanghai Gold Exchange settling record tonnage while the LBMA vaults bleed? Almost never. And that in itself is telling. Because make no mistake, the shift we're witnessing is seismic. Over the last decade, central banks, not just China and Russia, but Poland, Hungary, the Czech Republic, even smaller economies you wouldn't expect, have been steadily stockpiling gold. This isn't a coincidence. This is preparation. This is a vote of no confidence in the current fiat system. Now, I remember a decade ago when I started saying openly that the fiat dollar-centric system was living on borrowed time. I was told, Andrew, have you lost your mind? The dollar's not going anywhere. The US Treasury market is the safest place in the world. That was the consensus. And yet here we are. Those same people a decade later are quietly admitting, you were right. They see it now. The writing is on the wall. Look at China. People in the West like to paint China as wanting to replace the US as the world's imperial hegemon. That's not their goal. They don't want the yuan to become the sole global reserve currency. Why would they? It's an unnecessary burden. You don't need a single global reserve anymore. What you need is credibility, and credibility comes from convertibility. If China tells you our yuan is fully convertible into physical gold at market price with no funny business, do you think Nigeria or Brazil or Indonesia or Saudi Arabia is going to hesitate? Number, that's a currency you can trust. That's a settlement medium you're willing to accept. Because if you don't like holding yuan, you simply swap into gold. That's how you attract trade partners without becoming the empire everyone resents. And here's the important part. It doesn't require a fixed gold peg. That's a 20th century mindset. What they're talking about is floating convertibility. You sell your oil or your copper or your wheat in yuan, and if you don't want yuan exposure, you redeem at market price into gold. That alone neutralizes the biggest risk of holding someone else's currency, FX volatility. That's a game changer. Now put yourself in the shoes of Saudi Arabia. You're selling oil. You've relied on the petrodollar system for 50 years, but you see Washington freezing Russia's reserves at the stroke of a pen. You're thinking, what if they do that to us next? Suddenly, the yuan with gold convertibility looks very attractive. And this is why we've seen Saudi Arabia not just flirting with BRICS, but actively moving to integrate into this new multipolar trade system. They're building gold exchanges. They're talking settlement diversification. They see the future. So when people ask me, Andrew, what's the end game here? That's it. We're moving toward a world with no single reserve currency. Instead, multiple regional currencies, each backed by the credibility of gold convertibility. Not a gold standard in the old sense, but a new form of gold-anchored trust. And yet in the West, what's the response? Pretend everything is fine. Keep parroting that the dollar is strong. Ignore the fact that central banks are dumping treasuries and buying bullion. And when they do acknowledge it, spin it as insurance buying. Number, it's system hedging, it's preparation for a reset.
Well, tell me who they're selling the physical silver to, because someone has to be buying it. And of course, the answer is no, they're not, because how could you possibly sell all that physical silver? Because it doesn't exist. No one has that much supply. I mean, there's an argument. Maybe China does, maybe India does cumulatively, but they're in no way are they going to start dumping that kind of silver on the market. So it's obviously not physical silver. And these countries are going, well, we want commodities truly priced, based on supply and demand. We want them to be in non-Western markets. We want them to be not denominated in the dollar anymore. And it comes back to what we said with regards to BRICS and wanting to have commodities priced in non-dollar terms. Well, this is one of many, many examples where a country like Russia will put this into place by the end of the year. And that can easily be internationalized and utilized by, in the future, countries who say, for example, want to trade with Russia, and they say, okay, well, we agree not in dollars. And Russia says, we'd like you to take rubles. And they go, okay, we'll take rubles. And then what happens eventually when Russia goes, do you know what? We'll make it fully convertible to gold. So you can keep the rubles, and maybe you want to buy things in Russia with those rubles, maybe you don't, but you know what? You can have these fully convertible into gold. That isn't in place now, but don't be surprised when Russia makes a similar announcement, because all these countries, you see all these new gold markets turning up all over the world, and with exactly the same statements. And there is an inevitability in the end. They have to pose a serious challenge to the status quo, which is obviously the West. And over time, that is going to put more stresses and strains on those markets. And in the end, they either have to shape up or frankly disappear, because if you keep trying to manipulate these markets, in the end, one day you're going to get caught with your pants down very, very badly. And it's going to end spectacularly badly. So if they want to keep going, they're going to have to evolve into a market that is more based on supply and demand. Otherwise, the Russians, the Chinese, and every other country in the global south who want to operate on that basis will just corner markets, and the world will trade on that basis because they then believe that's a fair market, and everybody wants to see that. And there's plenty of Western people who'd like to see that with gold, silver.
Yeah, and as much as Russian gold is sanctioned, it's sanctioned into the Western-facing markets, not sanctioned into the essentially into China, for example. And you talk about China backing the yuan with gold. You're talking about Russia ultimately backing the ruble with gold. But gold in itself, physical gold, is fungible. It's the only fungible asset on this planet Earth where you can actually pin it down to an exact exchange price based upon supply demand. So if you've got supply demand prices being developed in between Russia and China, for example, and those BRICS that nations that interact with that, how can you have a separate price in the West? Because if that is underpriced and you want the supply, then you're just going to go to the West and take everything on offer, take everything that's unallocated, and then alchemize it into physical.
Yeah, absolutely. And this is part of the problem the West has suffered because, for example, China's market is the Shanghai Gold Exchange. The contract doesn't exist like this, but if you had a 1 ounce contract, it's backed by 1 ounce of physical 1-to-1, absolutely guaranteed.
Let's start with COMEX and the LBMA. For decades, these Western paper markets have been the price setters. The system worked. If by worked, you mean it allowed bullion banks to cap prices whenever momentum threatened to break free. They could short a paper contract at will, knowing less than 1% of contracts ever stood for delivery. The leverage was obscene. You had 200, 300, sometimes 500 paper ounces trading for every single physical ounce in the vault. And as long as nobody called their bluff, the charade worked. But here's what's changed. More and more players are standing for delivery. It used to be a rounding error, less than 1% of contracts. Now you're seeing 20%, 30%, even 100% of front-month contracts standing. That's unprecedented. It's a sign the world has figured out the scam. They don't want cash-settled promises. They want bars. And when you demand bars in size, the whole paper pyramid starts to wobble. Take silver. The LBMA reported just 155 million ounces of float left, the lowest in 140 years of records. Yet they trade 190 million ounces per day. And if you dig into the fine print, as David Jensen has, you find that intraday trading is often 10 times that figure. That's nearly 2 billion ounces a day, 3.5 times annual global mine supply, trading in paper. Meanwhile, the float is just 155 million. Do the math. This is a game of musical chairs with almost no chairs left. This isn't theory, it's happening now. We're seeing the LBMA stretch settlement from T+1 to T+8 weeks. Think about that. In a market that's supposed to settle in 24 hours, you're now told, sorry, no trucks, no manpower, you'll get your bar in 8 weeks. That's not logistics. That's scrambling to source metal that doesn't exist in deliverable form. And who's exploiting this? China, Russia, BRICS accumulators. They short paper in the West to suppress the headline price. Then they quietly scoop up physical from every source that isn't linked to price discovery. Miners, dory bars, concentrate, off-market exchanges. Vince Lancy calls it buying it before it's even called silver. They're going directly to Peruvian and Mexican miners, buying impure doré before it ever hits a Western refinery and shipping it home to refine themselves. That metal never touches LBMA supply. It never shows up in Western vault data. But it's gone. Why do this? Because price is the ultimate tool of misdirection. Keep the Western public fixated on a low paper price, and you can hoover up real metal at subsidized rates. Meanwhile, your vaults swell, your reserves harden, and your negotiating power grows. This is why I say, the West is being pickpocketed in broad daylight, and they don't even notice because they're glued to the COMEX closing price instead of the flows. Now let's pivot to gold tokenization. This is the next battlefield. BRICS are already rolling out gold-backed digital settlement units. Call it the unit. Call it whatever you like. The rails are being built. Multi-jurisdictional vaults in Dubai, Moscow, St. Petersburg, Hong Kong, Riyadh. Settlement systems like M-Bridge that connect central banks and commercial banks directly, bypassing SWIFT. These systems don't need dollar intermediation. They don't even need Western custody. And here's the killer feature. Settlement in seconds with imbalances netted in physical gold. 7 seconds versus SWIFT's 3 to 5 days. 98% lower fees. No sanction risk. You tell me, if you're a bank in Malaysia or Kenya or Brazil, which system are you going to choose? People dismiss BRICS as too small. But look at the numbers. When China connected its bridge platform to ASEAN, Southeast Asia's 800 million people, it instantly captured nearly 20% of its trade flows. Add in the Middle East, that's 38% of global GDP now linked. Then add Belt and Road, 155 countries, 75% of global population. This isn't niche, this is mainstream, and it's only accelerating. Now, the Western press won't tell you this, but Bloomberg slipped it in a footnote. China's cross-border payment system processed more volume than SWIFT this spring. That's the milestone. Once you pass SWIFT, you've won. And they did it without a single Western headline. So where does this leave the investor? First, understand that the old game, COMEX sets price, London clears metal, is ending. These markets will become price takers, not price makers. Price discovery is shifting east, where contracts are one-to-one backed by physical. The Shanghai Gold Exchange doesn't allow unbacked contracts. You buy a contract, you're entitled to the bar. That's credibility. That's why flows are draining there. Second, silver. This is the coiled spring. Unlike gold, which central banks can revalue, silver is an industrial metal in structural deficit. 5 years running, demand outstripping supply. Solar panels, EVs, electronics, all need silver. The U.S. Geological Survey warns reserves are being depleted. There are no new massive discoveries coming online. As Michael Maloney put it, we're running out of easy silver. The only way to ration it is higher price. Not just higher, multiples higher. History tells us silver follows gold in bull markets, but violently. Gold moves first, then miners, then silver. When generalist money piles into silver equities, and there are so few pure silver plays left, it's like trying to siphon Hoover Dam through a garden hose, as Doug Casey once joked. Prices explode. Third, revaluation. This is the elephant in the room. We know the Treasury holds 8,133 tons of gold, carried on the Fed's balance sheet at $42.22 per ounce. At market, that's worth nearly $600 billion. At revalued prices, the numbers get ridiculous. Revalued to $5,000, you create $1.5 trillion in accounting capital. Revalued to $15,000, it's $4.5 trillion. Jim Rickards has run the math to $24,000 per ounce. That's $7 trillion in new capital. With a stroke of a pen, the Treasury can recapitalize without issuing new debt. Roosevelt did it in 1934. Germany and Italy did it in the 90s. The Fed itself published a paper this year explaining how it works. They don't publish things like that by accident. They're prepping the narrative. Would it destroy confidence in the dollar? No, it would reset it. A devaluation, yes, but with gold backing as the new trust anchor. Better a soft default than a hard one. And it buys time, maybe decades, to restructure. So here's where I want to leave you. Don't get hypnotized by paper prices. Don't get lulled by Western narratives that gold is a pet rock or silver is just an industrial input. Watch what central banks do. Watch what BRICS build. Watch the vaults being filled, the settlement rails being connected, and prepare accordingly. Because when this transition goes mainstream, it will be too late to position. The premiums will explode, the shelves will be bare, and you'll be stuck refreshing a bullion dealer's website watching out-of-stock banners. The time to act is before the panic. As one tweet put it perfectly, you don't wait for the fire alarm to buy insurance. You buy it while the house is quiet. That's where we are now. Quiet on the surface, but smoldering underneath. The West can keep misdirecting with price. But price is not truth. Flows are truth. Accumulation is truth. And on that score, the message is clear. The world is voting with gold and silver. The only question is whether you'll be positioned on the right side when the dam breaks.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.